Hello and welcome to this session. This is Professor Farhat. In this session, we would look at the service auditor's role in a SOC engagement, in a service organization control engagement, SOC engagement. What do they do? What's the purpose of it? And what's the overall objective? Basically, an overview from a grand perspective. So in a service organization engagement, the service auditor. Who's the service auditor? We want to make sure we defined everything. Well, think of Farhat Lectures, my company. FarhatLectures.com is the user entity. It's a company that's operating, which is my company, and my company is into online education. That's my company. Now, I don't have my own IT department, so I outsource this business to this organization, this IT support called Best IT Support. So this Best IT Support is the service organization. So the service organization provides services to Farhat Lectures IT services. Great. This is how it works. Now I have my own auditor. I have my own independent auditor who happens to be PwC. Now when PwC audit my company and they want to issue a financial report, well, notice that this green part, my IT department, and it doesn't have to be my IT, it could be my IT, it could be my payroll, it could be my HR. I'm outsourcing the service to IT support. So PwC cannot properly audit my company unless they can get some form of an assurance or more information about the internal control over financial reporting at IT service. Therefore, they would ask the Best IT service to issue them a SOC 1 report, whether it's type 1 or type 2. We'll look at both of them later. So SOC 1 report is a report that discusses, that gives an assurance about the internal control over financial reporting at IT. I also want to make sure that Best IT support, they maintain privacy, adequacy, secure over their information, their system, because my information is part of their system, my IT support. So I will ask them for a SOC 2 report, whether it's SOC 2 type 1 or SOC 2 type 2. So the service auditor job, and let's call them KPMG. KPMG, who's the auditor of Best IT support, will provide an opinion, a professional judgment about the accuracy and adequacy of the service organization controls, whether those controls are over financial reporting or those controls are for trust service criteria, which is privacy, processing integrity, security, so on and so forth. So the subject matter here could be financial reporting, could be trust services. So in this session, we're going to go back and look from a grand perspective, what would the service auditor do in these type of engagement? What's their ultimate job? As a summary, let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. So in a service organization engagement, the auditor will have to evaluate evidence, collect evidence, and use this evidence to make a judgment. So the service auditor must assess whether the evidence collected, and don't worry, we're going to look at the SOC engagement step by step. And that's why I always recommend, before you take information systems and control, take your audit exam if you're studying for the CPA exam. Because when you're studying SOC engagement, you have to be familiar with the auditing concept. So if you learn auditing first, then you take ISC, it will be much easier for you. But beside the point, let's go ahead and go through this. So the service auditor will have to collect sufficient and appropriate evidence, same thing as in regular audit. This means what? This means determining if enough evidence has been gathered and whether this evidence is relevant and reliable for supporting a certain conclusion, for passing on an opinion on the information. So the service auditor will have to collect sufficient appropriate evidence, and they have to assess misstatements or problems or issues or deficiency in the control. The auditor must consider whether there are any errors or inaccuracy or deficiency in the information provided by the organization that have not been corrected. So these must be judged on whether these are significant individually or in aggregate. So what happened is they would look at each error individually, then they collect all of them in aggregate to determine if there's a problem. A misstatement is deemed material. Problem means a misstatement or an error or a deficiency is material when it could influence the decisions of users relying on the report. If it does, then it's material, and that's a judgment the auditor will have to make. So the service auditor, again, who's the service auditor here? KPMG. They'll have to audit best IT support, collecting evidence, and assessing misstatement. So what is the service auditor's opinion revolving about? So what's this opinion about? What are they passing an opinion about? They're passing an opinion whether the organization, system, and its control comply with the set of criteria. Well, it could be the fair presentation of what? Of the description. The auditor evaluate whether the organization description of its system is presented fairly. And this involves what? Checking that the description, just basically the description of their controls, whether it's over financial reporting or the trust services criteria, accurately reflects the system and if it includes all the necessary information. Two, they need to pass an opinion about the suitability of the design. So it's not only the description, is the design suitable? The auditor must judge whether the control designed by the organization are suitable for meeting the objective outline in the management description. So the description and the design of the description. I would say these are one engagement, description and the design, and this is usually in type 1 report. Then in type 2 report, they have to pass a judgment about the effective operation of control. Here they have to test to determine whether the control are working effectively. So this is specific to type 2 SOC. We're looking at type 2 here. Type 2 report involve assessing whether the control as designed and described by management, so it's mean point 1 and point 2, are operating effectively. It's not only that they are suitably designed, but they are operating effectively and specifically over a period of time. So that's what they could pass a judgment about. Description and suitability of design and the operating effectiveness, which becomes a type 2 SOC engagement. So let's go back about the subject matter of SOC 1. When we think of SOC 1, they are looking at the internal control over financial reporting. Now, in both SOCs, SOC 1 and SOC 2, they share the same overall objective to evaluate and verify the effectiveness of control at a service organization. However, the specific focus in each engagement differ. And I know we did this, but it's always good to go back and review. In SOC 1, in this type of audit, the service organization primary role is to assess the control at the service organization that are relevant to the financial reporting of the user's entity. So we're not interested in anything other than their internal control that are relevant to the user's entity. Who is the user's entity? Farhat Lectures. We're looking at their internal control over financial reporting that could influence our company. This is what we're interested in. This aims to provide an opinion whether these controls are designed appropriately and operate effectively, which is type 2, to ensure accurate and reliable financial reporting. And this is important for users' entity that rely on the service organization services to impact their financial statements, because when they prepare their financial statement, the service company becomes part of their system. So that's why it's important that you maintain proper internal control over financial reporting that's going to affect the user's entity. This is a SOC 1 engagement. In a SOC 2 engagement, SOC 2 focuses on control relevant to one or more of the 5 trust services criteria, TSC, which we already talked about and which we should know inside out: security, availability, processing integrity, confidentiality, and privacy. So the subject matter is different here. It's the trust services criteria, either one or all of them, or 2 or 3 of them at the same time. So here the auditor evaluate whether the service organization control are effectively designed and operated to safeguard and manage the data it handles according to these criteria. Because if I am giving you the job to handling my IT support, well, you're going to have access to my data. You're going to have access to my system, because my system and your system most likely somehow integrated. I want to make sure that my information is protected. It's secure. My system is available to my customers. It's confidential. I'm maintaining the privacy of my customers. So what do? I'll ask for a SOC 2 report to see if everything is going well. So this type of report is crucial for users who depend on the service organization to maintain the confidentiality and privacy of their data. If I'm giving you access to my system, I want to make sure whatever I'm giving you access to is secure, ensure availability and functionality of services, and protect the security of their information system. Because if you expose yourself, you're going to expose my information, my data, the privacy of my customers. So that's why I want to take a look at a SOC 2 report, specifically SOC 2 Type 2, to make sure your system, your controls, your IT controls are working properly. Let's take a look at this multiple choice questions to see if we can find the difference. What's the key difference in the focus of SOC 1 and SOC 2 engagement? What's the key difference? SOC 1 evaluate operational efficiency, while SOC 2 evaluate compliance with regulation. That's not true. SOC 1 evaluate the operational efficiency, and SOC 2 evaluate compliance with, no, SOC 2 does not evaluate compliance with regulation. It evaluates compliance with trust services. SOC 1 could evaluate operational efficiency if it's SOC 1 Type 2. And specifically, it's going to evaluate the operational efficiency of the internal control over financial reporting. But the second statement will make number 1 incorrect. Let's look at 2. SOC 1 focuses on financial reporting control. So far, so good. While SOC 2 focuses on trust services criteria. I would say nothing wrong with this statement. It's correct. Remember, SOC 1 deals with internal control over financial reporting. True. SOC 2 focuses on trust services criteria. Now we could have Type 1 report, Type 2 report for SOC 1, Type 1 report, Type 2 report for SOC 2. So remember, Type 1 deals with description and suitability of design. Type 2 deals with operation, if the controls are operating effectively. Let's look at C. SOC 1 assesses employee performance. Out. That's not what SOC 1 for. SOC 1 audits legal compliance. Out. So at least when you want to walk into the exam or when you start to study for SOC, you need to know that SOC 1 deals internal control over financial reporting. SOC 2 focuses on trust services criteria. The job of the service auditor is to issue an opinion about either the description or suitability of the design or the operating effectiveness of these controls. What should you do now? You want to go to Farhat Lectures, look at additional MCQs, additional resources that's going to help you if you're studying for your information systems and control exam. Invest in yourself, invest in your career. I have more than anyone else MCQs on my website, including AICPA previously released questions. Good luck and stay safe.